Hello, and welcome to this episode of Blockchain Bylines. My name is Nicolas Cary, co-founder and vice chairman of blockchain.com. So far this year, crypto has made leaps and bounds toward mainstream adoption, including the passing of the Genius Act, the U.S. decision to create a strategic Bitcoin reserve. We've seen huge institutions like BlackRock and UBS tokenizing assets on Ethereum and Fidelity, expanding into crypto to manage over $2 billion in digital assets. Blockchain.com has even launched a digital asset treasury solutions business. We've committed over $200 million to capital markets so far, and that has turned into over $17 billion in portfolio businesses. Digital asset treasury companies are a whole new interesting vehicle in this cycle. So there's a lot to talk about. These milestones signal a seismic shift toward integrating digital assets into traditional finance. So to unpack these developments, I'm so excited to have Erwin Voloder, head of policy at the European Blockchain Association. Erwin has been in Brussels, in Washington, D.C., around the world, talking to policymakers. And so we're going to be digging into all those conversations. Thank you very much for joining us, Erwin. So I'd love to talk a little about the dynamics really over the last 12 months. In a lot of ways, it kind of started with, again, a retail groundswell. And a lot of people may not remember, but from almost every perspective, crypto anchored by Bitcoin itself was really forged as a retail kind of momentum community and network. And interestingly, in the last election cycle in the United States, Stand with Crypto launched a nationwide campaign to get the vote out and to raise the profile of the digital assets industry. And it became a very bipartisan initiative with congressmen and senators building a big tent around upgrading the US economy, future-proofing it. And then after that, Donald Trump really, took that on and has been working with Congress in a rare bipartisan way to pass legislation in the United States to bring clarity to this important, national security and national interest level policy. And that is to basically put dollars on the internet, to open up the market to digital asset innovation and more. And there's been sort of this global foot race, but a lot has changed in the last 12 months. And so I'd love to hear from you, like, how do you see the policy making coming out of Washington, D.C., impacting how the EU especially is thinking about this? Give us a bit of a lay of the land on that issue.
I was in DC earlier this year, meeting with people in the House and the Senate, both sides of the aisle, and I think it was pretty clear then, Trump had just gotten into office, that there was definitely going to be an abrupt about face. There were communications out, part of his team was already picked and nominations were coming through, but at least from like the European perspective, I still wasn't sure what sort of shift were we talking about. Like, was this like a 3 Sigma or like a 6 Sigma move? And I think it's really been profound, to say the least, so much so that it's prompted several policy papers out of the European Parliament to discuss the United States digital asset policy and the European approach in the last 2-3 months. There's been myriad op-eds published in different financial outlets, and I think that it's been also a huge buzz on crypto media. So I think everybody from retail to institutional has figured that the United States is definitely serious about this, compared to what was happening under the Biden administration with everything from debanking and onwards. First of all, it's hugely positive because it's legitimized the industry on a level that I don't think many other jurisdictions could, given the United States' role in the global economy. So having one of the world's leaders in many different fields, economic, political, social, etc., legitimize the industry has been a credible signal. At the same time, I think that Europe had done its own groundwork over the last 5-year policy cycle with MiCA, and now that we're in the implementation phase of MiCA, it's sort of out of the Commission's hands, and it's been left to the member states to implement. And data is still coming in on what that's looking like. My guess, and this is just a guess at this point, is that we may see the same kind of rigidities that we saw in traditional finance and capital markets geographically play out across Europe. That probably will replicate itself in crypto. I know that people are really excited about passporting, but I mean, from a realistic perspective, there's been certain areas in Europe that have concentrated on certain industries historically, right? So there's been, textiles in northern Italy, automotive in southern Germany, in northern Italy. Then you have healthcare in Eindhoven, banking in Frankfurt, banking in London as well, asset management in Luxembourg. And based on the way that the applications are currently coming through, which NCAs are leading in terms of licenses, this is sort of confirming that same historical dynamic. And I think the biggest difference between the United States and Europe is and we see this now playing out post-Genius, is whether or not stablecoins represent a new form factor of money, to me, is secondary to the fact that the United States has a liquid capital markets and a liquid debt market. And I think this is the primary catalyst, not only for the Treasury to find new buyers for its debt, but also Europe doesn't have that same advantage. We have no common euro area safe assets to basically to bank on. Okay, so this is a huge catalyst for the United States. If it starts to move finance on chain, it's going to be a natural progression and a moat that it has set up simply by the fact that it has a liquid and unified debt market. And for me, looking at Europe now, there's only a few policy options on the table. Either you meet this in the same form with some radical overview of the Lisbon Treaty or of Maastricht, even. You have to go back to 91 and you unify the debt, you pool common debt, or you find some other way to fight on a semi-equal or equal footing. And these are very, very deeply woven political questions that to some extent have remained unaddressed for the last 4 years now.
It seems like there's a moment of, the United States has stepped on the accelerator here. And there is this global contest, the EU as a bloc and an economic unit, the United States as an economic unit in the Northern Hemisphere, and then obviously competing ones. And in a lot of ways, you can think about the economy and the design of money and the regulatory environment as building some kind of engine. And over the last decade, if you compare the speed at which the EU and the US have been growing, it's like the EU has been using an inline four engine. The US had like a V6, and now it just strapped like a V8 onto itself, and it has just pushed the accelerator down. And when it comes to like the regulatory position of the US on digital assets, the legitimization has really come not from saying that this is better than anything else. It's just by allowing for a competitive market to essentially build things better, cheaper, faster. And one of the challenges crypto has faced in the United States was just not having clarity. And then in the worst case, in some ways, was just not even allowing digital asset firms to compete against their traditional financial services firms. And now they're on an even playing field, which I think is really what you want. It gets the best outcomes for consumers and exports the best outcomes globally. And so the United States has definitely taken a very forward-thinking and quick, I would say, decision-making process that's been remarkably bipolar in an era of political polarization. And I think it's now like incumbent on Europe to respond. Now, you spoke a little bit about MiCA. There's been this deep, very rigorous intellectual exercise to look at digital assets in a regulatory framework that could be comprehensive and understood. And Europe, in a lot of ways, was very early in, I would say, starting that process. But, if you were to define what is in market now versus what we see across the pond in the US, what are the key differences, and where's the UK play in this now as they've Brexited? They've got an opportunity to differentiate. But let's summarize those things.
Let's start with MiCA. Well, that's the Markets and Crypto Assets Regulation. So it's the EU's landmark digital asset regulation that entered in force last year. And it covers everything from crypto trading, offering admission of crypto assets to the public, portfolio management, so exchange services, custody, things of this nature. And as other EU regulations, it's passportable, which means that if I'm applying for a MiCA license for some subset of services in one member state, then I can notify a national competent authority. So let's say the respective regulator, the equivalent respective regulator in another member state, and I can then transfer those services over. And there's a process involved within this so-called notification procedure. But let's say like the bulwark of MiCA, aside from this and the market abuse regime inside, is really the titles 3 and 4 on e-money tokens and on asset reference tokens, so broadly on stable coins and on asset reference tokens. And this is where everything from the composition of the reserves to the prohibition on interest to the risk weights of those reserves to everything in terms of how this is remunerable to the redemption policies to the oversight for significant stable coins, for example, ones that circulate in high volume within EU borders, all of that ring fenced within, like, let's say, like the middle, the hamburger patty of this regulatory cheeseburger. Okay. And I think that this is where a lot of the discussion between the United States and the EU on policy currently is juxtaposed. It's sitting in between, like, what the US has enabled under Genius versus how the EU has sought to regulate equivalent stable coins in its own borders. And there's been a lot of, I mentioned earlier, there's been a lot of pieces that have been published talking about this dual issuance. And for example, like stable coins that are issued in both jurisdictions by larger players in a certain denomination. But if you really think about, like, personally, I don't see why like an EU citizen would be using US dollar denominated stablecoins to pay for things in Europe. So on that regard, it doesn't make sense to me to have that same equivalence. And this is just a fact, if you look at from a trading perspective, the most liquid trading pairs are US trading pairs in Europe and in other places. So I can understand from a regulatory perspective the concern, and that the liquidity backstops arguably in Europe are also dollar denominated, because people are trading in USD trading pairs much more than they are on others, including euro trading pairs. Now, this is likely going to maybe recalibrate a little bit going forward, but we're way too early in that process, given that dollar denominated stablecoins have been around A for much longer, and B have been listed on a heck of a lot more platforms. It's insane. If you look at Tether, for example, right? Like their liquidity in Asia is ginormous. Okay, because they're used a lot in those areas, and so there is this kind of geographic localization as well when we talk about these things. And I think that, again, the other question comes down to the reserves. Like for European stablecoin issuers that are holding these in EU banks with 60% redemption in held to custody in EU banks, versus those that are in the United States that are backed by T-bills, generally short term for now. I think a big change could happen if these issuers start holding like longer duration notes, because that's when you're going to have a real structural impact on the treasury market, where these can become a de facto absorber for the bill complex. We're not there yet, but we're going to be there very soon if the treasury sees this as a buyer for auctions. And there's no equivalent to that in Europe, right? There's no equivalent to that. In the UK, potentially, because the UK also has its own sovereign debt market. But it's different if you're talking about the Dutch guilder or the German Bund or Italian debt or Portuguese debt or Greek or Croatian or Slovenian or whatever. There's no euro bond absorption happening, right? And then getting recycled through Target, through the instant payments and clearing. So I think that we find ourselves in a really interesting situation now, where Europe's the largest consumer market by population, but it's not the largest by velocity, so by turnover of money. That's still the United States. And you mentioned retail before. I think it's really also important to underscore the differences in how Europe and the United States perceive risk, right? European investors are a lot more cautious. Europeans they have higher net household savings. US consumers are a lot more risk prone rather than risk averse, and so are US investors. And so there's a natural propensity towards taking on more risk and taking on more leverage than there is in Europe. And I think that this also contributes to the proliferation now with the uptake of digital assets in the United States, also by institutional players, because there's more of this risk-on mentality by default. And so, a lot of these players were waiting in the wings. The banks, the asset managers, the broker-dealers, the hedge funds, they were just waiting for some, as you mentioned, signal from Washington, like, do we get a green light? And once you get a green light, and then it's just, you mentioned it's a V8. I say it's a V6 with a stage 3. So
yeah, it's got a booster on it.
Yeah, absolutely.
Okay. I think it's
absolutely.
a good way to think about it. And I really appreciate your, economist lens on all of that. It's becoming a globally competitive political environment for attracting not only the developers, but this kind of internet capital market now, which can strike 24/7, 365. It is moving very quickly, and it is investing in emergent technologies, in businesses. And I think that's a really interesting kind of transition from a world where we were so focused on commodity-backed assets in the last century. And that made a lot of sense as we were moving goods and services around the world and building a lot of new cities and expanding consumerism. But in this next century, moving electrons around the world and precious information is going to become increasingly valuable. And in the last century, the United States stockpiled gold and it stockpiled oil as national strategic allocations. And the current administration has signaled its interest in stockpiling, or at least storing, digital assets like Bitcoin for the next century. And I think it is such a bold and interesting perspective for this government to be leading with, as it evaluates, how the economy is really foundationally evolving and changing. And so I'd ask you an interesting question. I think, imagine you were a policymaker in Brussels. You've been through this Herculean effort to get MiCA passed, through all the different cycles there. And now you're faced with sort of this post-MiCA world where the United States is just maybe completely taking advantage of the opportunity to move quickly and decisively. Do you think it's time for a new set of conversations to start? How do you go about, framing Europe's opportunity here vis-a-vis the US and maybe Asia, and what can they be thinking about to react, respond to the speed?
Let me start with your last point on the reserve, because this is directly tied into that. I think that the United States moving towards a strategic Bitcoin reserve is probably going to be one of the most consequential things that any government does in this century, if it pays out. Because you have two strokes. You're outwardly hedging with your proliferation of dollar-denominated stablecoins, which de facto just support U.S. hegemony in financial and capital markets and on-chain finance, and then you're inwardly hedging against political risk and currency instability with a strategic reserve with a credibly neutral asset. And so combining those things together, you get this peculiar geoeconomic kind of perfect storm, right? Where at the same time you can position your own forward deployed monetary policy, and you can back it with Fortress Bitcoin. And I think that that's unique in that we are now in like completely uncharted waters, because what gold did from mercantilism to like 71, Bitcoin's going to do in leaps and bounds. Like it's going to do volumes of that, right? And I think that for Europe right now, I would hope, or I would wish at least, that this was at least a discussion that was happening rather than outright skepticism, just selective, introspective, and just generally open to the idea of exploring something that may end up being useful. Doesn't mean that you have to come out and wave an orange flag with a gold B on it, but I'd like to see some more appreciation for that from Brussels, rather than just, saying that this is a trope of the Trump administration and it's a fad. I mean, they're not the only ones doing it. Sovereign wealth funds around the world are doing it. And then let's not forget the indirect exposure via strategy and via other players, which national governments also within the EU are exploring themselves, right? Like the Nordics, for example. Norway just upped their allocation of strategy. I mean, this is all selective hedging for a future where multipolar and currency competition may be the norm. China's expanding its Enbridge trials currently. MENA region is also accumulating Bitcoin, and they've positioned themselves as a hub within the kind of the leeway area between APAC and between Eurasia, where they become like in German a Brennpunkt, a burn point for capital allocation and attraction, and then they're bringing in billions. And Europe kind of sits, it's this massive political project that sits in between, a rising interest in Asia, and it sits between a resurgent United States. And, this is political, economic, and social brinksmanship that is coming on chain. But also, as you mentioned, we're in a different theater of competition now. We're in cyberspace, we're in the ether, we're in this new economy that requires bold and novel approaches. And I think that if the United States, no matter what it does, whether it revalues gold from $42 an ounce to current market prices, whether it taps the Exchange Stabilization Fund, whether they issue Bitcoin bonds, or they use a sovereign wealth fund approach, or some sort of dividends paid out from those bonds that can go also into Bitcoin, they're going to do it if it makes sense logically. The country is 30 plus trillion in debt. It doesn't have a choice. It needs to think boldly, and it needs to think strategically. So this is something that's incumbent on policymakers, and they're also aware of it. And I think that Europe doesn't lack money, and it doesn't lack talent, and it doesn't lack entrepreneurs that are willing to take on the challenge of building this forward. I think that what we just need is a little bit more courage from policymakers to, step out of their comfort zone in certain things. And look, MiCA was a monumental achievement. I think that it's a great piece of legislation. No legislation is perfect, But the fact that Europe managed to get it, bring 27 member states to the table, debate these things that are highly technical and highly political is a huge achievement. And it needs to build on that achievement now going forward. And I think that this is now where we are. MiCA is being implemented, but there's new challenges that we need to think about boldly and competitively.
Well, I can see why you have your role at the European Blockchain Association
Well,
and a lot of work cut out for you. But also, I think your point around the talent pool in Europe and the desire to build in this space and contribute to it is immense. Some of the leading universities in the world are in Europe. They're producing young people that are extremely interested and passionate about these things. And I'd say there's a window of time to give them some confidence and encouragement that Europe is a place where they can build. So I definitely relate to those points of view. I guess I would ask you one last maybe question. I do want to dig in a little bit on the UK's sort of interesting
sure.
position now. They got out of Europe's economic entanglements for the reasons they did. They've been sort of, I would say, playing on the sidelines of defining what this kind of new economic sovereignty might provide them. And then the United States has gone and done all this work over the last 12 months. So now that the UK has taken its patient point of view and it's seen these two paths, what's an interesting path for the UK to potentially pursue now, having studied both approaches and now inviting maybe an opportunity to really differentiate how the UK, which has traditionally been a home of global commerce and banking and financial technology companies, from your point of view, what advantages does it have and how should it be thinking about this moment in time?
Well, historically, I mean, London, the city of London at least, has held a premier place in global finance, and ironically, I think, depending on the way that the United States, because within the Genius Act they have structured this sort of mutual recognition of equivalent regimes for payment stablecoins, you could even see a resurgence of the euro-dollar market on chain the same way that you did in the 50s and 60s prior to the Basel Concordat, right? You could see this happening even today, depending on the way that the UK ends up structuring its regime towards stables. What I really find is interesting in the UK was that they were one of the first major jurisdictions to look at staking seriously. And moving beyond that, looking at the digital gilt, the digital security sandbox, for example, I think that these are great initiatives. I would like to see a little less fence sitting on maybe the broader contours of the digital asset framework. We're still in these issuing these consultations and kind of deadlines have been pushed into 26 and maybe further. And I understand that there was a change of government and these things are part and parcel with that. But there's a lot of major capital sitting in the UK, a lot of super talented people, companies such as yours and others who are at the forefront of this, building these services at the vanguard. And so there's already an ecosystem in the UK, quite developed one with global reach. So not only within the UK, but they can project that success globally. And I think that providing them a little bit more clarity in a timely fashion would probably be the best case scenario. I know that it's always not easy to do that given the way politics moves these days, and there's a lot of other socioeconomic issues that take precedence, and sometimes our industry forgets that we are just but one piece in a larger puzzle. But I think that if there can be more coordination between between Treasury on this regard and with Parliament, then the UK could certainly come out on top there.
It's such a good point, which is that like the UK basically exported this like common law, to many jurisdictions around the world, including in the Caribbean, in the Middle East, and elsewhere. And actually, some of these jurisdictions are the homes of the largest digital asset foundations in the world that went to these places because of common law and their nimble approach to basically encouraging financial innovation, while the original, origin set for the rulemaking was really in London the whole time in the first place. And I think if they could invite some of that back on shore, encourage, and create a framework for foundation formation, DAO formation, legalizing these concepts and staking, it'd be a very potent combination. And the UK is in need right now, I would say, of re-onshoring the next generation of builders, especially in the financial services space. And now that is synonymous with digital asset firms and expertise in blockchain technology and crypto. And so the UK has a long history of cutting edge, cryptography research and institutions here. And this should really be playing on home turf And so I'm hopeful that, with all the competition in the world, but also some opportunities to basically bring some of this stuff back into their own jurisdiction, and they could see a pathway to potentially operating and developing policy to do so. Thank you so much for joining us today, Erwin. We really appreciate your time, and please remember to subscribe to our channel and leave a review if you enjoyed today's episodes. My name is Nicolas Cary, and on behalf of the entire Blockchain.com team, thank you for tuning in.
Thank you for having me.